Good morning, it's Harvey Jackson. Just going to get through some uh, wild news. It continues. The Strait of Hormuz is basically closed. It's not 100%, hey, you can't cross there, but there isn't a shipping company that wants to put a vessel in there with no insurance. So global oil and gas shipping costs surge as Iran vows to close Strait of Hormuz. And they also stated sometime yesterday that any ship that crosses there, they'll be on fire. But you can see these are the different major shipping companies, Maersk, Hapag-Lloyd, Frontline, International Seaways, and you can see that their shipping costs have surged for sure. Maritime insurers cancel war risk cover. Gulf will it spike energy costs? Of course it will. Oil prices keep climbing as expanding conflict heightens supply risks. And as time goes on, the longer it lasts, the higher the prices will go. Now, there will be a stabilization, though, as well. The key part of when I say that is these other countries are able to export more, not Canada, because we're brain dead when it comes to our government, but we can export a little bit more, but U.S. is actually a major LNG, and they can ship oil out of there as well. So energy out of there, they've increased their shipping capabilities in the last 10, 15 years, many times over, and that's when we've tightened it up and not able to ship anything out of there, out of Canada. Nigeria, I think they're back online. Yeah, and Venezuela is obviously a destination that can ship some energy as well, so stabilize some of the prices. The OPEC nations are already had a twofold increase in the last couple of years of putting stuff online. Sure, you're going to stranglehold some of these countries in that area, but at the same time, you got Saudi Arabia that's got a pipeline on off the west coast into the Red Sea that can start shipping out of there. But it's affected everything. Fertilizer is just absolutely gone ballistic, along with diesel fuel prices as well. Um, yeah, and it's not to say that it won't stabilize. That it will. You just have to look back at the Ukrainian Russian conflict there. Prices stabilized once they figured out how to get product around there. So it's increasing other products already. Basmati rice is held up in ports because of the cost of the insurance. And again, even insurance will get into black uh, shadow fleets and you name it. That kind of stuff will start happening even for other food grains as well. China's next 5-year plan, it's getting released here. I think on Thursday they're meeting, and it's their assembly going to meet. And these are some of the highlights that signals China's priorities for commodities in its own 5-year plan. So it's just like it's been for the last few years. They keep on increasing production of their own. Continued push for renewables, limited pullback from coal, focusing on managing oil demand, boosting natural gas use, attention on rare earths, stockpiling, and scrap consolidation, tackling industrial overcapacity, steel and copper, and food security. So all of these things that are said that it's going to be part of their plan. Now, exactly what's going to be in the plan, we'll have to see. Quick look at the weather. You can see the band of snow, more moisture down in some of the key growing areas for the corn, soybeans, and another band over here as well. You can see that's what's traveling across. Eastern seaboard is still getting some rainfall and snow. Cold to it's kind of trapped up there. Cold to the north and warming as you go south. Really nothing to see here. There's no real problems that you can say that there is some areas here that's dry, and that's a planting scenario for corn, but it's also a harvest thing as well. So things could progress as far as harvest goes. Uh, Canola up $5.60 at 7.04. Rapeseed is actually up as well at 5.02. It's up eight and a quarter a ton. Euro. Soybean oil 63.66, still on fire, almost a whole penny, 0.92 of a penny. Palm oil up 39. West Texas up to 76.11. Diesel fuel at 3.11. Soybeans up 17 and a quarter cents at 11.82. Soybean meal up $3.60 a short ton. Spring wheat up 2 pennies at 6.12. New crop there is up at 6.54. Still looking probably for $7 targets in that area if we can get there. Kansas, it's showing down here. Oh, I've got the wrong month here. Sorry, showing up at 8 cents and 3 quarters. Chicago wheat is up 7 cents. Milling wheat is up 350 euro per ton. and corn's up 5.5 cents, and the Canadian dollar's down a couple ticks. So I keep on putting this trend line on here. Respect the trend line. It's when it breaks that trend line that we would be concerned. We're approaching the 81 or 60, 61.8 retracement value, and it looks like it's right there right now. We'll see if it goes through there. Commodities seem to be getting the secondary lift from the oil. And this is following the next one here, but this is new crop. We're approaching 78 retracement value. And when you look at the European rapeseed, we're just at those previous highs there right now. And here's your soybean oil on fire. It's got all that lift and seems to be climbing that trend line pretty easily and staying up there. Here's your soybean futures. Now it's trying to surpass that previous high that we made back in November, and we're back there right now. And when we look at the new crop, it's actually peaking above there at the moment. Soybean meal futures is following a trend line up as well. This is the price differential between the European canola and Canadian canola, $94. And I've shown in previous videos last week, our freight costs it could be right at that area, depending on the actual cost to get through there. There's no good and easy way to find that out. Now with diesel prices going up, shipping costs will be going up as well. Crude palm oil, nice leg up. We're right at the 200-day moving average. This is the overall trend line, and to suggest that it's bullish, you would have to get above this and probably above that value. So you got a couple layers before you can actually say you're going to be bullish palm oil. And we haven't heard a whole lot of news coming out of palm oil. Here's your crude, green candle up there, your New York Harbor Freight, just rocketing, really. Here's your Canadian dollar, right at support trend line here as well. So it's still on an upward trajectory, but if it breaks below that and below the 200-day moving average, we could see some more downside there. And the US dollar is above the 200-day moving average and above this trend line. So now it's very likely looking to continue its bullish signals. Volatility index, we're right at this downward trend line. And if we get above there and above that, it would be obviously adding volatility. When you add volatility and you increase prices, you're going to increase margin costs on just about every commodity on the planet. So margin requirements for canola up until yesterday was near 600. You get this kind of stuff for any sustained amount of time, and volatility in the commodity itself, will increase the margin. So if we're tight for margins on the accounts right now, it could be something to watch out for. Wheat, trying to get above that 200-day moving average. Hopefully we can, and there is a little bit of support here. We'll see if it can continue. Kansas is above the 200-day and continues above the 200-day, so we'll see if it can continue this trend upward here. And you look at the Chicago, you got a steeper trend line than you do on the Kansas. The French milling wheat is just at the 200-day moving average here as well, and that's where corn is. So you got corn right at the 200-day, and you got this pivot point or whatever. So if we can get there and to go above, that would be a good thing for corn. Corn's exports are fantastic. So still looking forward to finding out what the numbers are for the Reuters poll or whatever for what the guesses are for the acres in Canada. Still haven't seen anything, but when we get that, we'll chip that out to you.